Hi, this is James Shrug with Westpac London's end of day report for Friday, September the 21st. European market sentiment was dominated today by fresh speculation that the Spanish government would apply for a bailout from the about to be formed European Stability Mechanism bailout fund in exchange for commitments on behalf of the Spanish government to implement further economic and structural reform. But these measures perhaps won't involve the sort of tax hike and spending cut austerity measures that have characterised bailouts that have been previously given to Greece, Ireland and Portugal and have been counterproductive in terms of helping reduce the budget deficit because of the damage they've wrought on the economy. So that gave markets a bit of a boost, saw Spanish bond yields fall back a bit, although comments by an Italian official along the lines that Spain and Italy won't need to apply for a bailout if yields stay low weren't helpful in that regard, and yields did push back up again. So comments by a middle to senior Italian official, speculation by the Financial Times, they're the main drivers today. Nothing really concrete though. We had some figures on Canadian inflation that fell further in August, both the headline down to 1.2% annual and the core rate down to 1.6%, declined in those August figures, emphasising that the Canadian tightening bias is a pretty mild one, I think. The UK had public sector net borrowing figures, basically budget deficit figures, the worst August on record, or the biggest deficit on record, with 14.4 billion being required to be borrowed by the government in the month. That excludes the support for the banking system. That means that the full year 2012-2013 budget deficit target of 120 billion is likely to be at risk if the sort of overshoot we saw in August continues for the rest of the year. Could be overshot by about 10 billion or more. So we're going to see, well, a choice really. The Chancellor can either abandon his targets or put in place more austerity. Let's see if it boils down to that simple choice or not. So that's it really in terms of market news. Nothing really to report out of the US other than various Fed officials talking. Lakota was saying that he liked the idea of holding rates close to zero until unemployment in America falls to 5.5%. Bullard was saying he doesn't like that idea. He thinks there are better indicators of the labour market. Didn't think it was appropriate to frame policy in that way. So the debate still goes on at the Fed even after their announcement of QE3 and the extension of the low rates commitment to the middle of 2015. So in terms of markets today, the London market actually down 0.1% at the moment, not quite at the close yet. It's about an hour of trading to go. I think the London market was hit by the budget deficit numbers, which posed the risk potentially of further austerity. The French market though up 0.75% at the moment, the German market up 1%, and the Spanish market up almost 2% today, with the Italians up just over 1%. And the US market is up about 1/3%, well over an hour into trade. Apple stocks are doing well. They're talking about a record weekend for iPhone 5 sales, and there's not really much else to report in the US, frankly. Just the European positive sentiment has flowed through to the US and the Apple story. In terms of commodity markets, gold prices are up about 1% today, $1,786 an ounce. Copper's up 1% as well, and oil is up just over 1% at $93.47 a barrel. The Aussie dollar is a bit higher too. It's been trading around 1.05 against the US dollar. It's currently just a touch under that rate. Looking forward to next week, we've got Prime Minister Gillard this side, well, this hemisphere of the world, the Northern Hemisphere. She's in New York giving a talk at the Economics Club of New York. Okay, that's it for me today and for the week. I'll be back again next week.